Hello, everyone. Welcome back to Crypto Crayfish. Um, let's jump right in. First, I wanted to talk about why it's been a little bit since I have posted a video. I know that's not usually like me. I usually try and have at least once a week. I got hip surgery. It's a long story, but basically, I'm just an old person in a young person's body. That's all you really need to know. But yeah, I've just been recovering and dealing with some of that stuff. But happy to kind of get back to things. I have been informed on the market. I just haven't had time to post or create videos. So hopefully I'll be more consistent from now on. And anyone who subscribes, thank you for sticking with me. And if you're not, consider it down below. All right, let's hop in. We're going to talk about Bitcoin. We'll cover the stock market maybe a little bit. But mainly, I want to talk about Bitcoin and the crypto market. And we're going to start with sentiment and head into historical returns, what it's looked like in past post-halving years. The post-halving year, if you don't know, is the year after the halving. The halving is when, the amount of Bitcoin mined goes down by half every 4 years. It's part of a cycle. It's also the post-halving year is also the post-election year. So that is the year we're in right now, and we'll look at historical returns, especially during the summer in those years, and cover some things in that sense. And then we'll get to the technicals. Bitcoin just had a pretty massive breakout, and it's looking really nice, even though I see kind of a lot of fear and shorts on the timeline. So let's talk through some things. First, I wanted to bring up the fear and greed. We got this nice little reset into April, which we talked about. We were buying when it was deep, deep, deep fear, the strongest fear we've ever seen. And we were all talking about that on this channel, and I hope that, you kind of recognize that that couldn't last. And here we are at new highs on the stock market, and hopefully new highs for Bitcoin soon. Right now we're at 73, which is greed. Although we were just last week or 2 weeks ago in fear, neutral / fear. So we got a nice little reset, and we're looking pretty healthy right now. This is what a parabolic run looks like before a top. Okay, you are in super high, like 80s and 90s for, this went almost 6x. So super, super strong price discovery, right? That is not something we've had yet. So for those of you who are like the top's in, we're done, I disagree with you. And there's many reasons why, but this is one of them. All right, let's move into some historical returns here. I'm going to go to monthly returns because that's the easiest way to look at it. This is into the cryptoverse, by the way. Thank you to Benjamin Cohen. All right, now we've got our beautiful returns table. Okay, should be able to select years. Let's see. Yeah, it's fine. Let's not worry about it. All right, so if we look, okay, we're going to look at our post-halving years. So first of all, let's just look at July in general. It's pretty positive, right? The average is 8.4% plus or minus 14% or 15%. You've got some negative years, but it's never massive, let's remove, even 2011, that's like back when it was so volatile. But within the last, if you look at the last, since 2017, so 8 years ago, we haven't seen a July that was more than 4% negative. Okay? So that's pretty good sign just to start with. Additionally, right, let's look at our post-halving years because that's the years we should really compare to. So the last one was 2021. We had an 18% gain in July, and then a 22% gain in August, which is interesting. We'll go before that, 2017, which I actually think looks more similar. We had a 12% gain in July, and then a 77% return in August. Now remember, the values will be different in the current cycle. This was 2 cycles ago, and you're going to get diminishing returns. That's just how it works as an asset gets larger. The moves are not as large. Okay? So do I think we're going to move, what would this be, almost 90% by the end of August? No, I don't. But it suggests that, we had 2 strong Julys and Augusts in those post-halving years. We can look at the other one as well, although it's pretty old history at this point, 2013. That was almost 10% green in July and 30% in August. Okay, so in all prior post-halving years, July and August have been quite green. Okay, just pointing that out. Now let's compare a little bit closer, because actually I really like the 2017 comparison. There's some things that don't line up with monetary policy and all that type of stuff. But if you just are looking at this chart, look how similar these years are shaping up to be, right? So we've got January. Okay, January doesn't match. Okay, that's fine. February also doesn't match. But then you get into March, and things start to be uncannily similar, right? So red March, April, May, green. Then you've got a red June, barely red in both cases. And then you're looking at green July, August, red September, green October, November, December. This is roughly the picture I'm expecting. I think we're following kind of the same narrative. Yes, first few months of the year were a little different, but since Q2, we've been following this almost to a T, right? Green, green, red, ideally green, green, is what we're heading into right now. Okay? Now, some things I want to point out with this. This lull, okay? I think it's still going to happen, right? I think September or the end of August could be weak, but I think what people are doing is front-running that too far. They're saying, okay, I'm out. Traditionally, there's weakness in August and September, and I'm going to get out of here. And they could potentially miss some really strong gains in July and August. So that's what I want you to be cautious of. And then I think regardless, I'm expecting a big green Q4. Unless something in macro breaks. But you look at 2017, you look at 2021, right? We got this weakness into the end of the year, but October was super, super strong. So some big top in the end of the year, right? We probably, again, can't expect returns like this, but I think Q4 is shaping up to be quite strong. That's when I would expect more of the alt season type stuff. Right now, I don't think we're there yet. I think Bitcoin has to move first, and I think the Fed needs to move first, and we haven't gotten more rate cuts or quantitative easing. So I'd stay out of alts for now. That's what I would say. I will be letting you know when I'm buying Ethereum again. All right. Now, this is kind of our comparison. This is July, right? And it suggests pretty strong returns. It really does. I mean, we're comparing to 40% gains in 2 months and 90%. Okay? So based on that, if it's roughly half, right? Maybe we get 20% in 2 months. I could see that. Somewhere around 130, 135 by the end of August. Doesn't strike me as impossible. So let's go now. We're going to talk a little bit about some of the technicals, because Bitcoin just had a major breakout. I've drawn some lines here for you. Hopefully my picture will load, but you should still be able to hear me. All right, here's our Bitcoin chart, and I've put it on a daily for you because I think it makes it a little cleaner. I've done it on smaller time frames as well. It works fine. It just, you take out a little bit of the noise with the daily, but you're not quite as zoomed out as a weekly. So this is a textbook bull flag. If you're not into technical analysis, don't worry about it. Basically, it just means This is a type of consolidation pattern that we see oftentimes in markets before it heads higher. Okay, and it's this like parallel channel, slightly descending, higher high or lower highs and lower lows, um, and then a breakout, and using that same line as support, which is exactly what we just did. Okay, we broke out last Wednesday. Since then, we've been testing and holding above this line. Okay, it looks really beautiful. It looks kind of textbook right now. And that scares me to say because, the amount of times you can't rely just on technical analysis, right? But I just want to point out that this is accompanied with the historical returns narrative. I think it looks really good. Also with the money supply narrative, which we will talk about. All right, let's zoom out a little bit more because there's a few other technicals that I want you to see that are pretty interesting. One of which is, I'm going to delete some of these lines so you don't have to worry about them. Okay, I'll take this line. This is an inverse head and shoulders, y'all. It's got a sloping neckline like this. Try and get this lined up as well as I can. Exclude the wicks. All right, so hopefully you can see this pretty well. I'll draw it out. Again, this is a classic bullish pattern that I just wanted to show you guys because it can be helpful to kind of look at the charts, calm yourself down, not worry about the intraday stuff as much. And let's see if I can draw. I'll use some arrows. All right, this is shoulder number one, right? Then we've got the much larger head. And head. And then we've got shoulder number two, which is still being formed. But the idea would be something like this. Okay? And with the breakout above, 114-ish, the way you do these is you do a measured move. So you can take a line from the neckline to the bottom of the head. And then you move that to the breakout point. Which you'll see I need to move my chart. Because that puts us going to 148. Okay? Am I calling for that immediately? No, but I do think it's, again, another signal that's showing something really strong. Okay? So I wanted to point it out. Now, what do I think could cause something like this? I think continued tariff news. I think, frankly, what I see is I think the Fed doing something, yes, could. But I don't see that as super likely this July. Frankly, what I think is most likely is everyone spooked, everyone starts to short, which we already have seen a lot of, and shorts end up underwater. I think that's what's likely. Everyone wants a stock market pullback, right? And it just hasn't been coming, guys. Like, this was the last pullback we got, and it was to the tune of, it was tiny. 3%? Okay? The last pullback on a larger scale we got was back here, which was 6%. And that was back in, end of April. Okay? So people are off sides, and actually the institutions are off sides, guys. There's a lot of data that shows that hedge funds are under allocated to the upside. CTAs need to buy, all these things that suggest that, they want pullbacks, and it's just not happening. Retail's been buying the dip, and they're unable to push the market down. Okay? And so you see, like, these dips are getting less and less. They're just starting to really move. We just had a little bit of a dip today, and I wouldn't be surprised, honestly, if this is even more short-lived than this guy. So we're just ripping to new all-time highs soon. There's this theory called the max pain theory in markets, which is wherever the majority of people will lose money, or the most money will be lost, maybe is a better way to say it, is likely where markets are going to head. And in that case right now, guys, everyone's like, oh no, the downside. No, people are under allocated. The max pain theory right now, guys, is the S&P continuing to rip higher. That is the max pain theory. And that would continue to throw things off sides, continue to blow shorts apart, and institutions would be forced to continue buying at higher prices. Okay? Because they're not getting the dips they're looking for. And frankly, I think that's the most likely catalyst I see in July and August, is just a market that refuses to cool down. It just does not stop on the stock side, and that starts to rotate into Bitcoin. Okay? So that's what I think is most likely narrative-wise. The last thing I want to point out, I have one chart here. Let's see how... Yeah, this isn't my favorite chart, but you can see U.S. money supply has made a new high, which is interesting, right? Because the Fed is not quantitative easing yet. You can see where they quantitative ease. I mean, it's really aggressive. Right now, we've just been handling balance sheets in a way that is slowly trending up. But there's some pretty interesting stuff going on with global money supply that I can show you. Sorry, my computer is slow. Hopefully you can see this coming. And, this one frustrates me in some ways, y'all, because, frankly, it's a general direction indicator, but it's hard to time short-term move with it. But saying that, we've kind of decoupled in the last few weeks, and to me that suggests that actually there's even higher potential of an upside move because we're behind. Does that make sense? So if Bitcoin were going to snap back in either direction, it would be more shocking for it to go farther away from this correlation than to head back towards what has been a very historically strong correlation. So you can see this was on June 9th. And you can see this chart, hopefully. Zoom out for you. So you can see, he's talking about how Bitcoin's near all-time highs. Global M2 has not stopped climbing for some time. US M2 broke into new all-time highs. Here we are, June 5th, right? And supposedly that's right here, and then we're getting this move higher. Ignore these dollar values. He does it in kind of a weird way. He's just talking about directionally. Now, right, we're in July, and we're still right around here. So we've decoupled and we haven't done this move. And what that means is likely, I think, that move becomes more likely the more time that passes. And along with these other things, it just is one more thing that makes me feel like July could be a really strong month for Bitcoin. So it's something where I want to be exposed. Sure, it's possible we get tariff news or whatever spooks the market in the short term. But honestly, I think it's more likely to me that we hold this breakout and head higher than head all the way back to say 95K, like a lot of people are calling for. So yeah, here's that M2 correlation, and it's pretty interesting to kind of follow. Feel free to follow this guy on Twitter. His name's Colin Talks Crypto. Um, And I don't know. He all he does is the money supply. So I just follow him for the charts. It's kind of interesting. One thing I track, but you can do your own due diligence, and I can also, post those in my videos, so you can just get it here as well. So those are kind of my thoughts on the space. I think a lot of people are fearful with the stock market being at all-time highs. It's historically overvalued, all these things. This is classic end of cycle stuff, y'all. We tend to see markets go irrational and get what we would call blow off top. So a move that just continues and continues and doesn't slow down and doesn't pause to let people in. And that's actually the not pausing is what creates the move, because so many people end up FOMO buying in at higher and higher prices. It just pushes it up like a rocket. Versus if you had dips for people to accumulate, it would be more slower or gradual. So that's what I think is most likely. I think that's the max pain scenario. We've had a lot of really strong stock market reads, a lot of breadth thrusts, a lot of things to suggest that we could continue to see some strength there. Pullbacks of a few percent, not what I'm talking about. I'm talking about kind of through the end of the year, it looks strong. And then I do think we get a pretty major recession in crypto and possibly the broader economy in 2026. So I'll be working on getting prepared for that. But for now, I think we're in good spot for the next month, maybe 2 months. And I'll be looking to try to trim my gains in hopefully July and August, end of July or end of August, and then pick up some more in the likely lull, and then head into Q4 with maybe a little bit of alts as well. That's my rough plan. I'll keep you all posted. I'll get you some dollar amounts and things like that as well. But, I've got over 80K in Bitcoin right now, so time to lock and load. I will talk to you in the near future. Appreciate you all sticking around, and talk to you soon.